Thank you, Gordon, for having us. I'd like to talk to you this morning about SRG mining. SRG is a TSXV listed company. We have a market cap of around 86 million Canadian dollars. Cash on balance is around 9.5 million, with no meaningful liabilities on the balance sheet. Our largest shareholders today are the La Mancha Fund, Sama Resources, and Coris Bank, who together have over 35% of the shares. We have one broker from Canada covering us today, 8 Capital, with a target price of $1.25. This presentation is broken down in 4 blocks. The first one briefly touches on the graphite market and why graphite is so important in the energy transition. SRG's strategy, which is very different than some of our peers. Of course, the team, and then the Lola project and the graphite refinery, the 2 main projects that are under SRG's umbrella. Graphite is used in lithium-ion batteries, but it's overlooked. A lot of people have heard about copper, nickel, manganese, cobalt, lithium as the key metals for the energy transition, and that indeed is true, but they all sit on the positive side, the cathode side of the battery. The negative side of the battery is made exclusively out of graphite. And as everyone knows, you need a positive and a negative side for the battery. So graphite is as important as some of the other cathode materials, but very much overlooked. Now, the backdrop to the market is even more interesting. The lithium, nickel, and cobalt market that are very well developed and have gotten a lot of airtime over the last 2-3 years show that the Chinese control the lithium, nickel, and cobalt refining part, but they don't actually have any meaningful lithium, nickel, and cobalt resources. The graphite market, on the other hand, is very different. The Chinese control not only all the primary mine supply, but also the refining. So you got what we call the double graphite problem. Since China has reopened, a lot of people have made the trek back to China, specifically the car makers like Ford, Mercedes, and Tesla and Volvo. And why have they made the trek back? Because they've come to the realization that if they want to make electric vehicles, it is impossible to do so without Chinese technology. And that really brings us back to kind of the key kind of strategy that SRG has embraced. Our strategy is focused on 2 key things. First, it's a phased approach to development. And secondly, it's a development through partnerships, specifically on the second step, the refining of graphite, where we have a partnership with a large Chinese anode material producer, a company called C1. So the reason people want to get into kind of the graphite refining business is that the margins in the second step, phase 2, are very attractive. There is a sorry, I'm stumbling here. there is a reason why people want to get into this business, because the margins are more attractive. But the question is, how do you do it? And a lot of business plans that we've seen show that you go from phase 1 to phase 2 all in one step. So you build a mine and a refinery in parallel. With SRG, we have decided that is not the right approach to development for 3 reasons. The first one is that if you build a mine and a refinery in parallel, you really have a very large financing hurdle in front of you. your flow sheet could easily cost well in excess of $1 billion. The second reason not to build a mine and a refinery in parallel is what we call project-on-project execution risk. You need to not only deliver the mine on time and on budget, but you also need to deliver your refinery on time and on budget. And that's a very difficult feat. Typically, when you look at mine development and then going further down to smelters and refineries, the mine would be built first, then the mine would be expanded, and then only you would build a smelter. And we believe that when we come to talk about battery materials and battery metals, we should kind of adhere to the same development philosophy. And the third reason not to kind of go and build two things in one go is that nobody's ever done it before. There are no industrial scale graphite refineries outside of China. So with SRG, we decided let's do a phased development approach. We built the mine first, and then in a second step, we will build the graphite refinery with the help of our partner C1. We recently announced about 2 weeks ago that this refinery will be built in Morocco, which is a country that we think has great advantages, which we'll touch on in a minute. A couple of words around our partners. The first one is the La Mancha Group. It's a fund that is primarily controlled by Naguib Sawiris. He is a well-known investor in the mining space, and his endorsement means a lot to SRG. Of course, his financial contributions are equally important, but his endorsement, their kind of DNA at La Mancha is to build companies from very small to very big. And they've done successfully that in the gold industry, and they're hoping to replicate that in the battery material space. SRG did a private placement with La Mancha in 2022. And that's how La Mancha acquired a 19.9% interest. They have the right to nominate 2 directors on the board, and they have anti-dilution rights. Importantly, La Mancha has also publicly stated that they are there to support SRG in subsequent financings up to approximately $50 million. Now, the deal with C1 is one that has 3 key characteristics. But first, I'd like to discuss briefly kind of the advantages of a partnership with C1. C1 is a relatively new company in the anode material space, but it is founded by Yu Min. And Yu Min is one of the pioneers in the anode industry in China. He was also a co-founder of the largest anode material producer in China called BTR. And in 2022, through a series of M&A transactions, he put together C1. And today they have a very large existing production capacity of around 300,000 tons of finished CSPG, 150,000 tons of artificial graphite, and some smaller products as well. The company is private, not state-owned, and has very high-quality shareholders such as BYD, Sequoia, which is now the Chinese Sequoia, and CATL. And we're very proud to have C1 as a partner. And the deal that we've done with them, as I mentioned, is made up of 3 parts. The first part is the private placement, where C1 will become a shareholder into SRG. They will invest 17 million Canadian dollars, and they will have identical governance rights to La Mancha. So 2 directors and anti-dilution rights. When the deal closes, we'll have a cash balance of approximately 28 million Canadian dollars. The second part of the deal is the flagship, the centerpiece of the deal, and it's called the Morocco Anode Alliance. And this really is a partnership where C1 and SRG are going to jointly develop the second phase, the refinery in Morocco. We're going to build this facility to scale. It's going to have a target production of around 100,000 tons of CSPG. C1 will contribute all the IP, all the engineering, and all the operational expertise in running the facility, as well as contribute some key clients, which we can take. We're not forced to take, but we're free to kind of onboard and make cornerstone shareholders of the anode facility in Morocco. In return, SRG will contribute to concentrate from the mine in Guinea, and will be responsible for 100% of the funding, but on return will remain 100% owner of the facility. To compensate everyone squarely and fairly for their contributions, after we've repaid third-party financing obligations, the profit will be split between SRG and C1. Now, really, in summary, what this deal is, it's effectively a technology licensing deal where C1 contributes their technology, their IP, their operational expertise, their quality assurance and quality control, but SRG is a 100% funding partner and 100% owner of the facility. The third part of the transaction is loosely defined as a technical corporation between SRG and C1. As C1 has recently built similar size mines and similar size refineries, we believe it could be valuable to SRG to leverage that experience. And so C1 is, under the terms of the agreement, prepared to deliver a turnkey EPC proposal for both the mine and the refinery. And the board will adjudicate the EPC proposals. The board is free to choose another proposal, but we believe that an EPC proposal from C1 could be highly beneficial, and more news on that will follow in 2024. Our management team is also a key asset to the company. The team is led by Benoit Lassalle. He is executive chairman of the board and the founder of the company. Alongside myself and Patrick Mourioussef and Hugo, we have the CEO, COO, and CFO. This is not our first adventure in Africa. Benoit is very well known to probably most of your viewers. He was the founder of Semafo, a company that ultimately got sold to Endeavour Mining, and currently is the CEO of Aya Gold and Silver, which is a large precious company in Morocco. My previous background was with Ivanhoe Mines in the Congo, and a lot of the other team have been working closely with Benoit over the years. Moving on to the kind of mining project. The Lola project is fully permitted. We have the mining license in place. All the environmental work is done. It's located in the southern tip of Guinea, near the border with Liberia. And Liberia will also be the main evacuation route for the concentrate. If you look at the geology of our deposit, the Lola deposit is an elongated crack in the surface of the earth, and the graphite occurs very near to the surface or at surface. There's an abundance of graphite on our concession. We've only drilled part of the strike length, and we believe that if we would continue to drill, that we could easily double or triple the resource space from where we are today. There's a couple of key resource qualities that you have to keep in mind if you would compare graphite deposits across the world. Of course, the head grade is important. The head grade minus the cutoff grade effectively dictates your operating margin, and that's the same for copper, for nickel, as it is for graphite. It gets slightly more technical that you also have to keep in mind that there's the flake size distribution that is important. Graphite occurs as very small little flakes. Effectively, if you look at it on a microscope, it could almost look like a snowflake. And the small flakes, the minus 100 mesh, which you see at the bottom of the table, is the material that goes into the battery supply chain, which is ultimately used as anode material. The coarser flakes have other industrial applications. There's a difference in pricing between fines and coarse flake. And so why it is important to have the right flake size distribution is that you need to be able to optimize your price so you make enough money to support your operations. We believe that roughly a 50-50 split between fine and coarse flake is the optimal, but please do keep that in mind. A third key resource quality is impurities. This is something that is often not talked about, but the tolerance for impurities in the battery supply chain is very low. And so if you have very low impurities, it does make your material very attractive to potential customers. One of the key characteristics of the Lola deposit is it's one of the oldest graphite deposits on planet Earth. And that means that it was formed before there was any organic life, which in turn means there's very low impurities in the deposit. Now, the fourth one is also something that's overlooked. Scale does matter. You need to be able to mine your deposit at scale. The most anode players are not in the market to buy 10, 20, 30,000 tons. They need to buy 100, 150, 200,000 tons of graphite concentrate. And so if you have a narrow vein, high grade, underground Graphite deposit, which has a very attractive grade, great flake size distribution, and no impurities, that's good. But typically, narrow vein, high grade underground means low production volumes. So it doesn't really tick the final box. And it is something that you do have to keep in mind. A couple of words around the feasibility study that we published at the start of this year, start of 2023. The design criteria was for around 100,000 tons of graphite concentrate. This study was prepared by DRA in Canada, and it illustrates $185 million of capex to get started, cash cost of around 545 or 585 all in. And the NPV and IRR are attractive with $200 million plus NPV and an IRR in excess of 25%. Now, we would not tell you to invest in SRG just based on this feasibility study. This only captures the first part of the business plan, the mine. But as you remember, we said this is a phased approach to development. So this feasibility study is by all counts the stepping stone to allow you to get into the second step, the refining of the graphite concentrate, where the margins are a lot more attractive. A couple of other highlights of the feasibility study are the construction period of 14 months, followed by 3 months of commissioning and 3 months ramp up. It's a simple open pit mining operation with a low life of mine average strip ratio. Processing flow sheet is very conventional, comminution circuit followed by flotation circuit. The concentrate is then dried and bagged, separated in 4 standard size fractions and exported by road through the port of Liberia onto the international markets. We do believe that there's some room to optimize the capex, the pre-production capital cost for the Lola project. These estimates came together in November of 2022, which is roughly the peak of the last inflationary cycle. Specifically, for instance, if you would look at the power plant and distribution, this is around 12 megawatts of power that we need, including the indirect cost that you see below. We have an allocation there of around $48 million for power. That's quite high, and we believe we can improve on that. And so that's just one of the optimization areas that I'd like to identify. And so together with our partners from C1, we're looking at putting together an EPC proposal for this mine that hopefully is going to illustrate a capex that is well below the $185 million that we've pointed out here. A couple of focus areas for 2024. Of course, we're working, as I mentioned just now, on the EPC proposal for phase 1 for the mine together with our partners C1. We're also working on refining the kind of business plan for the anode plant. Specifically, we need to do further work together with our partner C1 on the flow sheet and also make sure that we can present a set of economics to you as investors so you can see how incredibly attractive indeed this second phase is. Then there is additional news that needs to be brought to the market around offtake and financing for the Moroccan plant. Of course, we are still in the process of closing the transaction with C1, which we hope can occur at the end of Q1 2024, and that will be a key milestone as well for SRG. Lastly, things in Guinea are okay, but we still need to do more work, specifically around some of the power contracts that we need, export permits, etc. We have most of it in place, but there is always more work to do. So 2024 will be, again, a very pivotal year for SRG. 2022 was the year Mancha came on board. 2023 was the year C1 came on board. 2024 will be the year where basically everything will come together, and we will really have the financing in place to start the construction of phase 1 of the mine, as well as make great progress on our facilities in Morocco. So with that, Gorm, I think that brings us to the end.
Now that we have the overview, we will delve deeper into the case. This exercise will be categorized into 4 distinct segments. First of all, we will learn about the strength of the team and their backers, as well as the crucial partnership which unlocks SRG's business plan and separates them from their peers. Secondly, we will learn about the graphite market and how it relates to SRG. Thirdly, SRG's business plan have 2 defined phases, In phase 1, they will construct the Lola graphite mine, which we will learn more about in this segment. In the fourth and final segment, we will learn about the second and very attractive phase of the business plan, which is to build a 100,000 tons per annum graphite anode facility in Morocco. Let's get into the first segment. If you could tell everyone a bit more about yourself, because I think you've had an interesting career up until SRG as well. I mean, so tell us about your time as executive VP of Africa at Ivanhoe, and this journey, and maybe then pivot over to why you decided to leave that promising career there and jump into SRG with Benoit.
Yeah. So even before that, I studied mining engineering and metallurgy, and so that opened my eyes. And I was lucky enough to go work for a Canadian bank in London, the Bank of Montreal, and so and that really got me really in contact with Africa. And to get started, we did a lot of work. By virtue of being based in London in Africa, and that's where I met Benoit for the very first time. Because he was still working for Semafo at the time. And Robert was a client, and after doing the IPO, we moved in house, a couple of us. And Ivanhoe was a phenomenal journey. We did everything from discovery to first production, the financing, the engineering, all the hurdles we had to take. But at some point, you have to kind of take stock and pause. And I had a very nomadic lifestyle, and it was time to just hit the pause button. And so I did that. And after having taken my break, we got together with Benoit and La Mancha, and we looked around and looked at a whole bunch of opportunities, and SRG was one of them. And in the end, you make your decisions based on kind of the three key buckets. The first one is, what's the project you get to work on, and everything's in that bucket. So it's jurisdiction, it's commodity, stage of development, you name it. That's one bucket. The second bucket is like, who's the team you get to work with? That's Team Benoit, so to speak. And the third bucket is who are your shareholders and who is funding this? And that's where La Mancha came in. And so if you get a high score in all three buckets, you should probably do it. And so when we looked around and so like we saw an angle with in the commodity with graphite. Not everything was crystal clear at that point, but you get to work with a great group of guys, and you get very kind of I'd say tier one shareholders alongside you to support your kind of repositioning of SRG. Then it didn't take long to decide. So that's what we did.
I guess people get the sense that you're an ambitious guy, which is very important with ventures like this because you need the drive to see it through. So I guess just to gauge, what kind of exposure do you have to the share price directly, and could you explain your vision from that point of view? It strikes me as that was an important factor to motivate you switching gears.
Exposure to the share price, like this is always a complicated question, right? Like there's no Elon Musk style reward scheme attached to my performance here, but I'm perfectly aligned with the shareholders in that this is my main gig. I have enough shares that vest over a period of time to make this worth my while. It's important when you're, I'm not at the end of my career. I'm probably early to mid career. So you're highly driven because you want to prove that you can do it, and that's worth more than a couple of pennies here or there. And so if you get to work with great shareholders that support you, and you can somehow prove that we can crack this graphite riddle, that's really what's driving me. And so the financial reward will follow, but it's not the primary driver, to be honest.
Yeah, it makes sense. And as we know, I mean, Robert has a very ambitious culture, and that surely must have rubbed off. And this is a big, a big vision that you have just with the plant. It's a tough nut to crack. I like your roadmap there, but we'll get into all the details, I guess. And then just with the board and the management, it's the kind of the Benoit team, you say, from Semafo. You share a bunch of the directors and management with Aya. Maybe you can highlight, some of the unique strengths that this team brings compared with your peers in the graphite market.
Yeah, so like uh, we're always more focused on ourselves than necessarily the peers. But what is key is that you actually have built something in Africa, specifically in French-speaking Africa, and that's why you would not find our team all of a sudden in Latin America. We like it there; it's good for holidays, but it's not where we spend the bulk of our kind of collective careers. And so you go where you've had some success before and where you've delivered something before, and that's you look at the kind of the kind of common ground that we have between La Mancha, perhaps some of the Ivanhoe DNA, and Benoit's group is that it's like this is the who's who of French-speaking Africa mine development. And so that's what we have, and that's what we don't want to kind of hide that under a bushel. We think this is a part of the world where we can do business, and where we have a lot of experience. So that's what the team brings. And we're never going to tell you that everything's always going to be perfect in Africa. But as an investor, you should think, okay, well, if there is a problem, who would you like to sort out the problem? And it's probably one of these couple of groups where they've always kind of had a way through. And so, like today, everything's good, but like things go up and down. And so you gotta have like your track record in kind of keeping things, on track. And I think our group has that.
And then, of course, touching back on the intriguing shareholder structure, as you mentioned, La Mancha, we understand that's a very strong shareholder. Could you just give an example of one of the companies that they've helped build and maybe briefly outline what that looked like?
So, of course, Endeavor Mining is the key one, and so that grew through a whole series of M&A transactions, and it meandered over the world from Australia to Canada and now in London. But the large part of the asset base has always been West Africa gold, and it's always been a vision of kind of keep building the company, never be content with the what you got, and just try to add the next piece of the puzzle to it. And this is to take my hat off. Not many companies are built into a FTSE 100 company from scratch, but that's what they've done. And most companies take about a century to become a FTSE 100 company. So in mining, this is no small feat.
So they were there from the start with Endeavor, from
Yes,
the
yeah,
before the first mine.
they put the thing together. Yeah.
Yeah. And what kind of active role did they play? They
Well, they're
financed
they're the largest
sequentially.
shareholder, so they then you to some extent have a larger say too. And they had several mining assets, and they put the things together and then moved them forward and bought something else, put more money in. It's a combination of putting assets together and keep financing it. And if you have an owner that has a vision like that, I think that's very important.
And to clarify for those that don't know, Endeavor has also been active in West Africa. They acquired Samafo, where Benoit led that company
Correct.
previously.
Yeah.
So that's kind of the background to how they became familiar with you guys.
Yeah. Yeah, and the mining world is not a particularly big world. So
No.
Naguib Sawiris, who is the principal behind the fund, and Robert Friedland, and then there was the late Lucas Lundin, and there is you can count them on two hands, the big mining entrepreneurs, and so everyone knows each other at that in those rarefied circles.
Yeah. And then you have Sama Resources and Coris Bank. Can you just give some color on what kind of shareholders they are?
So Sama is how we, with Ivanhoe, or actually a sister company of Ivanhoe, originally got involved with Benoit. Um, what is now called Ivanhoe Electric made an investment into Sama, and became the largest shareholder not only in the underlying asset but also in the public equity of Sama. So there's an indirect link with Ivanhoe Electric there. And SRG spun out of Sama, and that's why they have a residual shareholding. And for those who are wondering, SRG stands for Sama Resources Guinea. whilst the other one, Sama Resources, Ivory Coast. And Coris Bank is a privately owned, large Burkina Faso-based West African bank, and they were a shareholder from very early on in SRG, and they've been quite active also on debt financings throughout Western Africa. And you would have seen their latest transaction with Hummingbird about a week ago, where they're not only the lender but also putting up some more equity.
So all of the three big shareholders are, familiar with you guys. They basically endorse the team, and because they're familiar since previously. So it's loyal shareholder base.
And we like it like that because it allows you to work in relative, quiet quietness to move things forward, because otherwise you would have to spend a lot of time on the road raising money, which actually for the last 2 years we have not had to do, which is positive.
And then just La Mancha's anti-dilution rights. Could you just describe how that works? Do they put up cash, or are they have a fixed baseline that they?
No. So if they exercise, so let's say Gorm, we do a financing tomorrow, and for $10 million, and their shareholding today is 24 and a bit, or 23. They would have the right to maintain their shareholding at 23, and they would have to put up the cash to do so. So it's not like they get free shares or anything like that. It's real money.
And then major strength and differentiator for SRG is your anode material alliance with C1. And I mean, throughout the conversation we will cover all the relevant aspects. But if we can just start with to get a bit more granular on what kind of entity C1 is in the world of anode material.
Yeah, so this is not a world that gets a lot of headlines, especially not outside of China. Perhaps more recently, it's grabbing a few headlines. But so in China, there's probably 5 or 6 large anode material players, but it's a pretty concentrated industry. And the chairman of C1, Mr. Yue Min, he was the founder of one of the largest anode material companies in China called BTR. And BTR is Beijing listed, has got large government shareholdings, and they're really at the forefront of this whole anode industry. And after about 17 years there, and 300 patents in his name, and another 300 patents in BTR's name, Mr. Yue left. And when his non-compete expired, he very quickly put together a competing company. It's not like he built every asset from the ground up. There's a lot of independent graphite mines and graphite purification plants and coating plants in China. So he, through a series of M&A transactions, he very quickly built a relatively sizable production base. And then he's got all his R&D kind of capabilities and patents and ideas that he gathered over the last 17 years. And so it has a very strong production base. It has a very strong R&D center, and they have also embarked on building with new money large production bases that actually a lot of people probably haven't even seen outside of the West. So when China reopened in February of this year, 2023. We were probably one of the first visitors to kind of visit the plants that they have built through COVID in China, and really this is a classic example where you blink 2 times with your eyes, and all of a sudden they've built this massive coating plant, and you see it all over China. Like it has nothing to do with just graphite. Like their ability to build at scale very quickly is just unparalleled in the world. And some of that we'll try to replicate in Morocco. I don't think we'll ever be able to do it as fast as they can do it in China, but we can most certainly try. And so it's a very entrepreneurial company that has a deep desire to move overseas. The decision making is quick. You just have to call the chairman.
What kind of balance sheet do they sit on, and what kind of annual kind of economic power do they have? I'm assuming it's multi-billion-dollar for sure.
So it's a good question. The graphite market in China today is an oversupply. The economics and the results that people are putting on the board across the industry are not very good today. And it's a classic example of like where they overshoot. They build too much capacity, and now there needs to be kind of a rationalization. And what's going to happen ultimately in China is that I call it graphite refining 1.0 and 2.0. So they 10 years ago they started this industry and they started to build purification plants 10, 20, 30,000 tons of nameplate output capacity. And now what they're building is 100,000 ton plus plants, 150. So all the little old plants are gradually going to be shut down. That's production is going to be taken out of the market, and all the big ones are going to survive. It's the classic kind of situation of economies of scale that are going to prevail. And so what you get is that over the next year or 2 years, I think it will still be quite choppy in graphite land in China. But when the dust settles, I think there'll be 4 or 5 big players left, and they have government support to kind of see this through. And then they will be hugely kind of cash flow generative. The desire for some of these guys to move overseas is also, and I'm sure we'll get to talk about it, driven by the graphite export controls that have recently been announced. But today, C1 is well financed. It's got good shareholders, and they're supporting them through this kind of next 1 or 2 years, where they're still ramping up their production base and they're moving overseas. So I don't think you should expect them to post multi-billion-dollar profits here for this year or next year. But they have the shareholder base to see this through. And they're one of the kind of consolidators. They're not on the lunch menu, so to speak.
How was the relationship with C1 established initially?
So through COVID, when the country was closed, we had a team of people working in China, and so we laid the foundations kind of as early as when I came on board in China. And when the time was right to go there again, and you could do so without quarantining yourself for 30 days, we were one of the first visitors there. We had in mind who we would like to target first, which was C1. And we had a structure in mind that, in a way, is relatively unique and has got some attractive parts for Team China in there as well. So we pitched it. And then you, of course, have to develop a relationship. It's not as simple as you show up one time and you sign a term sheet. It takes a bit of time to kind of build the relationship. But after several trips to Guinea and trips to Morocco and France and elsewhere, we got there, and the relationship now is good.
And this is something that you're asked a lot, I'm sure. But could you kind of explain from their point of view why C1 wants to do this? What's their rationale, and why
Why
didn't they pick one of your peers? Yeah, exactly. Why specifically you?
It's a
As
good
well?
question, because there's probably between the ASX in London and the TSX 200 graphite juniors, and there's about 6 graphite kind of senior partners in China. And so I think what we had is, in a way, we were able to leverage some of the experience I'd gained through my time at Ivanhoe. It was not the very first time to go to China. And we raised significant money there over the years, and so some of the ways of doing business and what will and what will not stick, I think I learned over the years there. But secondly, I think we were the first one. That always helps. And I think what is also important is that we came with a structure that is very interesting and, in a way, attractive to the Chinese, but attractive to us. And that's always the art. Like, it can never be in China a deal where one party looks to gain significantly more than the other. It's got to always be balanced, and that's a very important kind of element, because if they feel that you get way more than they do, they won't do the deal, and vice versa. You wouldn't do it either. So I think that's really what clinched it.
You describe it as being a fairly consolidated market. Like you have five or six players globally that make up the bulk of the significance. These Chinese companies, are you seeing any of the competitors of C1 announcing similar deals with your Western competitors?
So there was a company on the ASX called Evolution Mining, and they announced about 6 weeks after we announced our deal, a deal with BTR, which is the company that our chairman founded, Chairman Yu from C1. And very similar in nature. The company is quoted on the ASX and not the TSX, but similar idea. So I think what you'll see happening is everyone is looking to make inroads into China, and eventually there's only going to be so many dance partners. Our deal with C1 is an exclusive one, so we're the worldwide exclusive partner for C1's overseas ambitions. So yeah, there's a couple of others still left, but not many. And in the end, I would encourage others to copy our deal. It's the ultimate form of flattery.
When the standing non-binding agreement is closed, and this is a ballpark because not every parameter is set yet, what would the shareholder structure look at that point post transaction?
So I think we will end up with two shareholders being La Mancha and SRG close to 20%. Then we'll have Sama Resources drop to roughly around 10%, and Coris will drop slightly below 10%. And everyone will get diluted. The shareholders below that will get diluted pro rata.
So 60% of the float will be a long-term hands, and then
Yeah.
management and board. How much does the management and board hold
Probably
collectively?
a couple of percent, but then we have an extensive network of friends around us, and but I wouldn't consider them management or board.
Yeah, but so we're talking a very tight shareholder structure,
Yes.
that's for sure.
Yeah.
And then I guess we could kind of end the segment on the rough timeline of closing the C1 deal. If you just outline the remaining steps.
Yeah, so we announced in about 2 weeks ago our intention to re-domicile outside of Canada. In order to re-domicile the company, we will need to call a shareholder vote. And in order to call the shareholder vote, you need to send materials to your shareholders. You can't just call them up and say we're having the vote now. So there's a timeline that we need to kind of work through, but the timeline is effectively within our control because we think we have the votes to make a transaction like this pass, and we think in Q1 we'll have the vote. And at the tail end of Q1, moving into Q2, we will be able to move our domiciliation outside of Canada, which then will allow us to close the transaction.
Now we will move over to the second segment. Here we will learn about the graphite market, which is slightly more complex than that of more homogeneous commodities such as copper or gold. The graphite market is not completely homogeneous, I guess, as say gold. It's not as simple. It's a bit more complicated. It's quite. You have to be a bit tech savvy on the processing side for sure. It's tricky for people to understand. So let's try to form an understanding. It is a basic one. First of all, what does the annual supply and demand for I would call it raw graphite, I guess natural and synthetic graphite as an input product look like currently?
It's a good question today. So you have to split out the two because there is synthetic graphite, which is very different than natural graphite.
Okay.
And let's say that today the market is call it around 1.6 million tons or something like that for natural graphite, and probably slightly larger for synthetic graphite. And that's tons of concentrate flake. And that's what it is today. But really, you have this hockey stick curve kind of demand that is projected, which is effectively directly linked to the kind of adoption rate of electric vehicles, both in Europe and in North America. And so I think if you look at what the market is projected to be by 2030, it's going to go 8 times or something like that. I mean, there's it all like last year the predictions were different than this year because like the supply of electric vehicles is patchy and regulations change and stuff like that. But it is really projected to grow exponentially. Is the long and the short of it.
How is the natural and synthetic portions bifurcated? Are they used for different end uses, or?
So really, it comes down to a couple of key characteristics of the battery, so to speak. And if you think about it, there's roughly three key characteristics that you want to keep in mind. And there was a great piece in the on Bloomberg actually around the first characteristics, which is charging time, very important. The second characteristic of the battery is call it the range. How long can you drive with the thing? And the third one is the performance, the torque. If you put your Tesla in ludicrous mode, it has certain requirements for the battery to be able to deliver that kind of output. And so when you look at natural graphite, it scores particularly good on the range front. While synthetic scores particularly good on the torque and on the cycle time front. And the answer is, of course, that you want a mixture of both. You don't want a car that charges really quickly and takes off like a rocket ship, but can only drive 50 miles. On the other hand, the other one that drives 1,000 miles, but takes a decade to charge and is as slow as a semi. It doesn't work either. So the answer is always between synthetic and natural that it's going to be a mix. There's also two other key considerations between synthetic and natural, not performance related, but they are related to cost and they're related to the environmental footprint. Synthetic graphite has a much worse environmental footprint than natural graphite, and it has to do with the purification method, which basically subjects it to huge temperatures. So a lot of electricity is required to refine it, and natural graphite does not have that. And the cost. Natural graphite is cheaper, especially in the long term, than synthetic graphite. So you put all these three key kind of battery characteristics and the two kind of other characteristics in there, and it's very easy to see that if you want to optimize it, you need a mix.
So I guess just to appease potential concerns about the synthetic side, what exactly are the chemical reasons for synthetics being inferior in certain aspects contra natural? I mean, would it be possible? Has it been done that one could expensively maybe right now create synthetic graphite that serves the range aspect?
Oh, it's possible. It's possible, but you have to also weigh up that as we are trying to everything's possible. Like this is engineering, right? So it's just can you do it at scale, at cost competitively is the real question. And so you have to weigh up that you need an awful lot of power to make synthetic graphite, and the one thing that we're probably short in Europe is power. And especially if we even have it, then the costs are not competitive. So yeah, so everyone is going to be hugely cost sensitive here, and I think this is a point that's overlooked when you look at the wider kind of battery materials space. Is there's a lot of focus on security of supply. There's a lot of focus on the different materials, what we do need and what we don't need. But what is kind of not really discussed anymore is the cost curve, and it does matter because in the end, what's going to happen is that if the price of the battery goes up, because this Inflation Reduction Act actually is the Inflation Creation Act, then actually we've achieved nothing because what is going to drive mass adoption of electric vehicles is a lower battery price. But now we have just created all the inputs that are 2 times more expensive. So like we've actually not achieved the main goal of this policy. So we have to be very careful of this. And I think this is one of the key kind of differentiators with the deal that we have with C1 is that we believe we will be able to deliver high quality anode material at cost, at a competitive cost in great volumes, which is really what everyone wants.
Yes, and it seems to me that the first step, the phase one step, is not the biggest challenge. The biggest challenge is really the phase two
It
step.
really is phase two.
Yeah.
Like in the end, making graphite concentrate is not, you have to be careful. I'm not going to say that this is without any risks and we just do this, with our eyes closed. But it is a relatively straightforward mining operation. And a straightforward comminution circuit and a straightforward flotation circuit. So that's not really, yes, of course, you have to operate in Guinea. That's maybe the biggest complication there, but that's perfectly doable.
And then just briefly, the main end users for graphite, and what's kind of the split, and what's the split projected to look like in a couple of years from now?
So it's very interesting that it depends again, like this is a word we'll use too often probably in this conversation, it depends. But it depends on what kind of battery chemistry you're really pursuing. So if you have a desire to have a high performance battery, which is kind of where we're leaning towards with the choices that Mercedes and Tesla and others are making in Europe. Tesla Model S, Mercedes, Volkswagen. In Europe we want high performance cars. Then you're probably skewed towards, let's say, 70% synthetic, 30% natural kind of graphite anode material, just by virtue of kind of having the desire to have more performance. Now, if you go to the cheaper batteries, which are predominantly kind of now used in China, the LFP market, then you see a lot higher concentration of natural graphite in the anode material, perhaps as high as 50-50. And so the question is, over time, are we going to see an equal adoption of LFP batteries in Europe as we've seen in China? We believe the answer is yes. We believe that yes, early adopters always want the best product. Like you want your car like your Tesla Model S, the best of the best. But ultimately, there's going to be a lot of cars that are going to have a lower cost, that have a less performance battery, and that will play beautifully into the hands of the natural graphite contribution in the anode material.
Yeah, I mean, and that's Tesla, the predominant. That's their stated, strategy since the start. So that makes total sense. I guess not looking at just the anode, but what other actual significant uses does graphite have currently in the economy?
My friends always joke that we're in the business of selling pencils, but that's just a very, very small niche part of of the industry now. So there's a lot of graphite used in electric arc anodes. So like these big things that dip into the pots of molten metal. They're used as refractory liners in blast furnaces. Call it more standard industrial applications. And so the growth profile of those sectors is significantly flatter than what we see for kind of anode materials for lithium-ion batteries.
And then it would be very useful to describe the road for natural graphite to get to their end users, kind of, because you have some mechanisms that are not the same as, let's say, this very simple gold market. You have some differences in pricing depending on flake sizes. How does this work? Can you describe the path for the natural graphite to their various end users?
No, so in the end, a lot of the graphite, probably well in excess of 80% of the world's graphite ends up today in China. And loosely, there, depending on the purity of the flakes, there's 4 different products, the same products that you can see in our feasibility study. So it starts with the really fine flakes, and then it gradually moves up to the bigger flakes. And there's different pricing for different flakes. And the simplest way I can summarize it for you is that the fine flakes, the flakes that are used in the supply to make anode material for batteries, they attract the lowest price, perhaps as low as $550 a ton today. The coarse flakes and the big flakes are the most expensive, the material that we sell today, and that would attract a price, close to maybe $1,000, $1,100 a ton. So there's a big spread in between the two or four products, and that's something to keep in mind. And that's coming back to kind of like why the flake size distribution matters, is that you need to have a good average price.
And this is set predominantly by the largest anode material. They basically have
Yeah,
most of the purchase.
it's set pretty much on a monthly basis. and then there is various indices that people follow, domestic Chinese indices, and Benchmark and Fast Market publish some of this as well.
And this might be an absurd question right now with the market dynamics, with the export ban and stuff like this. But what would Lola's, flake mix currently fetch on average per ton?
Uh, Good question. Currently, it would probably fetch around 800, probably.
So 800. That's quite close to. I mean, you have a margin there, but it's not super good compared to
No,
all-in
correct.
sustaining
And
cost.
this is something that is really really important to understand where we are today. Is that the long-term price for graphite, as we model it, and our peers model it, and Benchmark Minerals models it, for our basket price is around, call it $1,300 to $1,400 a ton. Yet the spot price hovers significantly below that. And so this is not a situation dissimilar to where lithium was a long time ago. And that means that something is about to change. And we believe that graphite could have its moment in the sun in 2024. We're well positioned to benefit from that, because if you look at what are the most valuable lithium companies today, are the companies that build, you know, production facilities when the spread between spot and long term was the biggest. And we have exactly the same situation again today with graphite.
And then switching over to the very important topic, I guess, why is China so completely dominant in this market? What's the reason for it?
They started earlier, right? Like, so they realized some time ago that they were never going to compete on the internal combustion engine. That was a market that was completely controlled by Europe and North America, and fine. Like they like Chinese, internal combustion engines never really made the cut as an export product. So they decided, and this is the beauty of having a command economy, that they'd skip that phase and not try to play catch up, and basically develop electric vehicles instead. They didn't go down the model of what the Japanese did, which started to bet heavily on hydrogen. And they went and betted on the lithium ion battery. And so they started about, I'd call it conservatively, 10 years earlier than we all did. And so then, there's a development timeline that you work through, and that's why they're ahead. I think you can probably ask anyone today, and they agree that they're roughly a decade ahead of us.
Yeah, and in a market like where the end product is fairly homogeneous, I guess at the end of the day, you get a massive moat just in terms of scale. So they
Yeah.
just are going to price out everyone else permanently, I guess. Is that the dynamic that has been created?
I don't know, because they also have a desire to move overseas. They have a desire. CATL, for instance, who's a large battery manufacturer, they have customers like Tesla and others. So it's not it's the Chinese. I don't like. There's a lot of headlines, and you have to be always very careful what you say on this subject. But um, I do believe that um, they don't necessarily want to kind of out muscle everyone out of the market. Like, they need Tesla to be successful, they need Mercedes to be successful, because they sell just as many batteries to them as they sell to their own electric car manufacturers like BYD and others. So it's like they just, they're now for the first time in a position to export technology. That's really where we got to. And previously, they were importing technology.
So they have this scale. They're ahead. They started earlier. And it seems to me that they will have to be the as they're doing with you now. They will have to be the force to enable this to grow up in this Western sphere of influence markets. It doesn't seem to me like Inflation Reduction Acts and subsidies are able to cut it, because you don't face the gap of knowledge that's required as well.
Well, so the question really is, like, how quickly, like, what's the number one objective? The number one objective was that we wanted to, actually, it was two. We wanted to slow down global warming and improve the air quality in our cities because New Delhi was becoming unlivable, Paris was becoming unlivable, Beijing was unlivable, and yes, the temperature of the planet was rising too fast, creating all kinds of other problems. And so that was why we decided, to make the energy transition. Then came along a big trade war, and all of a sudden now we've decided that actually the primary objective is to decouple ourselves from an existing supply chain and recreate it. But I think we have to go back and say, okay, if the objective is still to actually just clean up the air and slow down global warming, then we have to go back to like, okay, how do we get there? And we get there by working together. And that doesn't mean that you need to have 100% owned Chinese factories all dotted through Europe. Like, our model is very elegant. We control 100% of the factory. We license the technology, and it allows us to basically meet the policy goals of our host governments. Seems like a good idea to us.
And then if we just think about how the kind of there seems to be a bifurcation in the market, and that's probably what C1 is identifying. They want to be able to participate on the western side of the line that might be drawn. I don't know if you want to be that extreme, but it's tilting towards that way. What will kind of what will be the consequence of this, and what is driving it? Is it mainly, is it mainly policy on the Chinese or the US side and the European side? And will there be a bifurcation in pricing? I mean, how will it actually affect the economics for you directly in the future?
I think what to answer your questions in reverse, I don't think there's going to be a bifurcation in pricing. People talked about that in commodity world for a long time, and it never really materialized for any commodity. Don't think graphite's going to be the exception. I think what's going to happen is people, are going to try to make sure that their material qualifies for various subsidies, but it's still going to be kind of secondary to if you can deliver high quality material at scale at a competitive cost. That's going to be of great interest to everyone. So the subsidy, like, they can't, like, unless they outright stop a company like SRG from building something together with the Chinese. Can't stop you from building the factory and starting to produce, provided you meet all the kind of permitting kind of standards that are required. And then there will be a market because people are putting up gigafactories, and they are in the market to buy anode material outside of China, and so they have to kind of weigh up. Okay, this is a large source of anode material that meets all our criteria. Yes, it's perhaps not 100% compliant, but what other choice do we have? Like, the alternative is no material, very small volumes that maybe qualify, or buy from China. So this is the pragmatic solution.
And from the purchaser's point of view, they want to kind of in line with government policy, they want to secure their supply, and that dynamic is driven by geopolitical risk partially, but mostly out of shortages that they can see in the future. There will be probably too little refined graphite in the market with that kind of
Yeah,
projected growth.
and I think the end users are going to take every ton they can get. You only have to look at the projected installed kind of battery kind of capacity for Europe, or Europe I think is 1.3 terawatt. US is maybe 1.6. So roughly, that means you need 1.6 million tons of anode material just for Europe. That's finished. That's CSPG finished, like finished product. So if we produce 100,000 tons, somebody will take it. I can assure you that.
So offtake you don't view as a problem, and we'll touch on that briefly before we end this segment. Could you kind of highlight, if we start from the point of view of this being challenging for Western actors to kind of achieve this? It hasn't happened in the last couple of years, and there's very few that looks realistic from my point of view, at least, that will actually build an anode material processing facility. So could you highlight, how the anode alliance with C1 really addresses these challenges that is being faced in the West, and how that really unlocks this potential for you guys?
Yeah. So for us, what is really important is that um, there's always this question mark of like, if let's say you build a gigafactory in Europe, and then that's a $2 billion investment. So the final call that the investment team is going to get is like, have you guys bedded down the supply chains to feed this gigafactory? Because we better make sure that we have all the ingredients to make what we need to make. And then they're going to say, yes, we have it. And then they say, okay, where is the majority of this stuff going to come from? And a lot of it will come from China. So then they say, well, what's the solution? And they can't bet a $2.5 billion investment on an unproven production facility for anode material outside of China. It's just not, like, it doesn't make any sense from a risk point of view, because unless you've tested the material for the last 5 years and you're comfortable that somehow this is just going to just be there for you. But most people won't do it. Like, so they're all looking to the existing suppliers. So then if you bring an existing supplier that has a proven track record in delivering the right quality material to a country like Morocco, from where we can trade with Europe and the US, and we have the right quality and the right brand and already the right customer base in China, then of course that's going to be of great interest to everyone, because they know it works, and then everyone can um, uh, sleep better at night once they've made that investment decision to build the gigafactory, because it is paramount that you have the right material, the right spec, so you know that your batteries work. Otherwise, the whole thing falls flat on its face. And they're just not going to bet the farm on a garage science experiment. I just don't see it happening.
So the force of validation itself, and that kind of cumulated track record that the Chinese manufacturers have had, is enough of a factor to kind of essentially allow them to. I mean, grassroots attempts from the West is going to take a lot longer.
I'm not saying it's not going to work. I'm just saying that it might take a bit longer than people think, and it probably will take more money. Um, and then probably they'll get there. But the demand is happening now, and we come with a model which is elegant in a way that we have a governance framework that means that people get comfortable with our corporation together with C1, but it's de-risked by them contributing their technology, and that's really the essence of it.
Yeah, and not to mention, as we know, that Musk, he says this ad nauseum. It's one thing to build a prototype, a science experiment, to showcase feasibility there.
Yeah,
But when you build a 100,000 ton per day factory or per year factory,
very different.
that's a very different
Yeah.
beast.
He called it whatever he called it, commissioning nightmare or something like that, right? And
Yeah, and I think he says like 100 to 1 in terms of complexity and
yeah,
difficulty.
yeah.
So
So it's the same for all this, and this is also where I think mining companies have to be honest with themselves. Like, in a way, for us to say that we're going to build a mine in Africa, could be lithium, could be graphite. Like, we have a track record of doing that. The second step is really a chemicals business, and most mining companies don't have a long track record in building chemical factories, and so this is why you need outside help to make sure that you take that step successfully. And we believe that with C1 we have the right recipe.
So C1 is driving this for you. What other things do you see as opportunities for you? Because I mean, one could maybe, and we talked about this previously, is that when you have a Chinese investor, maybe these subsidies might be a bit tricky. Could you clarify, people? Everyone will make those connections. So if you just clarify, that might
Yeah,
not be an issue.
I don't think the subsidies necessarily are going to be more difficult. Depends a little bit where you are in the world, to be honest. There is, of course, Like, let's say if you wanted to build a Chinese factory in the middle of the US today, it might be a bit harder. Having said that, Morocco is a very open country, and I don't think they look at it unfavorably if you come with a Chinese investor. And Morocco has a very favorable subsidy regime. But you could say equally the same for France. There is plenty of companies setting up shop in France, and they're welcome there too. So the question here has always been, and I've said this publicly many times, the question is not if this happens. The question is not when it happens. The question is where it happens, because I think like the Chinese are moving overseas, and they will find, be it in Mexico, be it in Morocco, be it in Hungary or in France, they will find their preferred locations to set up production facilities, and they will start delivering.
Next, we will venture into the details on the first phase of SRG's business plan, the construction of the Lola graphite mine. Here, we will focus our efforts on the timeline and feasibility of the planned operations. Phase 1, the Lola graphite project. Could you again just kind of outline the nature of the ore body, if you start to understand the asset a bit better? What's the kind of the strike? What's the potential? How deep is the ore body? Can you give some of the parameters that goes into it?
So the Lola deposit is quite an elongated crack in the earth, as I mentioned in my presentation. It's about 8.7 kilometers long, the strike length, and it roughly is directed north-south on our concession. The deposit is really at surface. There's a tiny kind of overburden layer. In some places at surface, in some places we have 3 meters to scrape off, but not much more. And then you get to a typical kind of West African style deposit where you have a weathered layer, and then you have a hard rock deposit underneath. The weathered layer is also graphite, as is the hard rock layer underneath. And that weathered layer is anywhere between, call it 3 to 25 meters thick. And then you get another, call it 60 to 80 meters of hard rock underneath. And that makes for relatively simple mining. It's an open pit that kind of migrates south. It could be several pits, and as I mentioned, no pre-stripping required to get going. And there is two things to keep in mind when you talk about the weathered layer and the hard rock layer. The weathered layer is perhaps easier to mine, but slightly harder to process. Your recoveries are typically a little bit lower. But as you get deeper, yes, you need, it's slightly harder rock. It's not weathered, so you need more explosives, more digging. But the recoveries in your processing plant are typically higher. So the best answer is to blend it and have a bit of both and get a reasonable average recovery. And that's exactly what we're doing.
So, I mean, in terms of mining, you guys know that in and out. Of course, you guys know processing as well, at least for, more conventional metals. So mining, I'm not very concerned about. If you were a financier, I guess, who might not be familiar with the processing, is this very conventional processing? Could you describe, has this been done multiple times before? Has C1 done this exactly before? Because they will provide a EPC.
Yeah, so C1's most certainly done this before. There is not many other graphite mines in the world outside of, there's a couple in Brazil. There's something going on in Mozambique, maybe Madagascar, but there's not. There are not 50 Western engineered graphite mines out there. So a lot of people will say that they can do it, but not a lot of people can actually point to, precedents. And so with C1, we're hoping to de-risk that a bit, because people can go visit their mines and see what they've built and what they're proposing to build for Lola.
Yeah, so it's mainly the you will rely heavily on EPC on what C1's EPC.
It's one of the options. There's other EPC contractors there, so they will tender. We believe that their tender will be attractive, but the board will most certainly solicit alternative proposals to make sure that we get the best product, because it's not a guarantee that we'll give it to C1. It has to be the kind of preferred proposal, not only based on price, but also on kind of secondary kind of considerations like commissioning, um, um, you know, warranties and stuff like that.
And we value a bunch of different operations, and when you look at the contract mining costs, they're very high for an open pit operation, and the processing costs are also high. I'm assuming this is something that's when you put it into relation to the competing graphite mines, it's probably one of the better ones. But could you explain why this is and where Lola stacks up against other graphite mines globally?
Yeah, so I think we have some. We can most certainly improve on our contract mining rates, and in the end, I you have to look at the cost kind of as a kind of like an all-in picture. Um, I think there's very few graphite mines in the world, if any, that consistently produce at scale for like $300 a ton. It doesn't really exist. So anyone that's pitching that could be true. I'm not saying that it's not true, but it's you should definitely investigate. On the other hand, you look at the current operators like Syrah and a couple of guys out of Madagascar. It very quickly hovers around $500-600 a ton, and that's just the real price. China, yes, maybe they can produce 300, 350, but realistically, that's a Chinese cost. That's not a cost that you can easily replicate overseas. So we feel that where we are around the 500 mark is probably the correct mark. Could be a little bit lower if we optimize the cost structure, but I think it's probably right, to be honest, based on our experience of what things cost in Africa, how long it takes, what the productivity rates are, how you work with the rain, etc.
And the feasibility study, is it kind of painting? Are you including sourcing stuff from China? But obviously they
No,
know how to build
no,
stuff like this. You don't, not at
no.
all.
So that was all Western quotes.
Okay.
So that's why, like, I think in the end, we hope that we will come back to the market with a slightly revised EPC number, and even if it's just based on Western engineering, I think we can improve it. I'd like to believe that most certainly with Chinese contributions, we can improve it.
Yeah, both on, and you see both on capex and opex,
Yeah.
and improvement. Uh, in terms of when you get the EPC, uh, if C1s is just very good, and they've built similar operations previously, they know who can build it. Could even the competence to build it be sourced from China potentially?
Yes. Yeah. Yeah. That would most certainly be part of it. Yeah.
Yeah. So it's a cooperation, not on just the schematics.
No, no, not at all. It would be
Yeah,
the full
yeah.
delivery of the project.
You see, like to the north and to the south, the Guinean government has two plots of land. They're certainly not going to build a graphite mining operation, and there seems to me to be significant room for resource expansion in the future. Could you kind of describe this? How will you work with them to?
Yeah, so I'd like to believe that if we have a concentrator there in an existing mining operation, we'll be in prime position to expand our operations there. We have quite a lot of graphite already on our license, so we're not short of resources today, and that graphite belt goes all the way into Liberia. So, at the right time, we will discuss with the government in Conakry around these licenses. Today is not the right moment. Let's deliver on what we have first, and then we will make our next move.
But certainly more long term, you want to be kind of a full stack, wholly integrated actor in this chain.
Correct. So, and then like the size of the refinery that we're proposing to build in Morocco will need third-party concentrates anyway, and so we will probably be sourcing those from other places than Guinea. So let's see. But I don't think just our mine in Guinea will produce sufficient volumes to feed the entire supply for the Moroccan facility.
And I guess just to touch back on the flake size aspect. I mean, so that's you would produce X amount, but how much of the X is actually usable in your Moroccan
Destined
facility?
for Morocco, half.
Yeah,
So
half.
if we produce 100,000 tons of material in Guinea, about 50,000 tons will go to Morocco.
But you certainly see the capability of
Oh yeah, we
upscaling
can go to
Lola.
100. Like I
Yeah,
don't think that's the question. It's just at some point, let's see if you have built one mine, what's better, right? Like
yeah.
do you spend more money doubling the production there, or do you tie up some offtake somewhere else, or do you do both? Also possible, right?
Yeah, phase two is certainly a lot more
Yeah.
lucrative, so it
So
makes sense to spend the
yeah,
time there.
yeah.
Can you describe Guinea as a mining jurisdiction?
Yeah, so I came to Guinea for the first time maybe about 8 years ago or so, and it's a country that has a very long history with mining. So there is a lot of bauxite that's mined, which you use for aluminium, and then there's a lot of gold, and there's a lot of iron ore. Famous deposits are located in Guinea. Famous iron ore deposits like Simandou and Nimba, Zogota. And so it's got a long history mining those commodities, and that's important because yes, there's been some government changes over the years, but the mining industry has typically continued uninterrupted, and that should give investors some confidence that the government sees the importance of mining. At the same time, they have not had much success outside of those three commodities, but the government is very keen to diversify the economy away from those three key commodities: gold, bauxite, and iron ore. And so they are very supportive when it comes to developing a graphite project. This is meaningful diversification of their mining industry. At the same time, we've brought a well-known investor like Naguib Sawiris to the country. We're bringing Team China to the country. So the government's very supportive of what we're doing, understands the complexities of building something in graphite, which is not as simple as gold. And so we feel okay in Guinea.
So a couple of follow-ups on that. Who is operating the major mining companies
Yeah,
in Guinea?
Um, the largest bauxite mines are actually operated by Abu Dhabi. Um, and then Rio Tinto is investing heavily, hundreds of millions of dollars this year and next year, into a mining project called Simandou. So Rio Tinto probably, they've got a division of kind of strategists, probably bigger than the entire team of SRG, kind of opining on the geopolitical stability of Guinea. So they think it's good. So we're encouraged by that. There's other players that have put money to work in Guinea, like Orion, Mine Finance Group. There is large Chinese interest. There's some Russian interest. So it's truly kind of a mix of flags that is active in Guinea. In the gold mining, companies like Hummingbird, Robex, all listed on London or Toronto that are active there.
And it's not a case of a bunch of old mines; new ones are being built
New
proactively
ones are
right
being
now.
built.
Yeah.
Like for instance, Managem, Moroccan state-owned mining company, has finished a project there. So there's plenty of activity.
And what's the fiscal regime there? I mean, what taxation rates are you seeing for mining? Have they been stable? Are there any royalties associated with mining there? The outlook
Yeah,
there.
so they have been stable, and what is important again is that the government acknowledges that, and I think a stable fiscal regime for mining is very, very important. We lived through a regime, or like a fiscal regime change, a mining code change in Congo, didn't do anyone any good. So I think I'm encouraged by what we see in Guinea. And, for the rest, the framework is the same as everywhere else. There is corporate tax, there are royalties you have to pay, but most importantly, the way you add is by employment and by upskilling the labor force. And I think that's something that we of course will take very seriously.
So specifically, what royalties would apply to Lola, and what's the tax rate?
About 2.5% royalty and about 30% income tax.
And 2.5, that's NSR royalty, is that
Correct, on the
correct?
revenue. Yeah.
And you expect that to remain the same? That
Yeah,
nothing is up for revision
there's
there.
we have no expectations that that changes.
Yeah, so there's no negotiation or anything like this on that side.
No,
That's the same.
no.
And then in terms of the permitting status of the project, what's the status there?
So the company has a mining license for Lola, which is the highest standard of licensing that you can get, and that's valid for 15 years, renewable 2 times. We're good with that. Then we've done the environmental work that is a prerequisite to get the mining license, as well as the feasibility study. So from a permitting point of view, we're in a good position for Lola. There's another key permit that we need, which is the export permit. There has been a lot of discussion around how do you evacuate your product from Guinea to the market. There's a couple of projects that have the dispensation from the government to export through the Liberian corridor, and Lola is one of them. SRG has that permit. That's important because we can just truck 370 kilometers south to the port of Liberia, the port of Monrovia, which would save significant time and money. I don't think it would be feasible to truck today from Lola all the way through Guinea to the port of Conakry.
The entire path to offtake for Lola would be trucking through Liberia to the coast, and then it would be shipped to an offtaker. And I take it likely C1 will be the initial
Yeah,
offtaker.
they could potentially be one of the key off-takers. Like when we all discussed this at the board, we have a large Chinese shareholder. They are buying third-party concentrates. Let's see.
For sure, from an investor's point of view, offtake shouldn't be a concern. At least you're at least
No, I don't think
backstopped
so,
by.
and that's part of why if you go back to the investor presentation and say what does C1 contribute? It's their distribution network. It's very important to know that they have tier one clients like LG, Panasonic, Samsung, etc. And for us to be able to sell our concentrate initially to C1 and then on to producers like that is hugely valuable. So we don't have any desire to kind of reinvent the wheel when it comes to that. If it works today with those blue chip off takers, works good for us.
So you're essentially fully permitted. Offtake doesn't seem to be a huge concern here. Just some more color on the basics of the mining project. I mean, do you have access to labor locally?
Yeah, there is the town of Lola, and then there is the town of Nzekore, which is slightly bigger, and those are relatively large towns, and there are plenty of people there that can be drawn into the labor force, and there is a road nearby. There's electricity lines there. We'll probably need to build some diesel generators, install some diesel generators for the power for the mine. But over time, we can potentially connect to the grid, and so there's everything. There's a little airstrip, and it's not like the middle of the jungle or anything like that. It's there's some vegetation, some clearing to do, but it's not a particularly hostile environment by any means.
And in terms of water access, is that all good as well?
No, there's a positive water balance there, so that's not a problem.
Could you outline, starting from next year, all the significant steps as you see it towards getting to commercial production at Lola, and sign a time for it as well?
So early next year, hopefully, we'll get back with an EPC proposal, and then that will quantify the total investment. We need to give an update on the financing package that is required to then put that EPC proposal, to turn that into reality. In parallel, there is some early works that we can do, perhaps in the first half of next year, in on the ground, like clearing of the ground, access roads, and stuff like that, with the aim of starting kind of full construction later in 2024. Um, the feasibility study highlights a 14-month construction period. Let's assume that the Chinese proposal will be the same. Might be faster, but could be 14 months. So that gets us really into kind of the tail end of 2025 by the time that's all built. And then commissioning and ramp up moves it into 2026 to reach steady state production.
So Q1 next year would be you close the currently non-binding agreement. You get the cash injection. That will leave you with 30 million CAD or so post that. That 30 million CAD, is that sufficient to get you to get you through to the financing stage? For sure, it should be.
It gets us a long way there. Let's put it that way. We have La Mancha there as a contributing partner, and C1 there, hopefully both maintaining their stake. So if we raise $10 million, 40% of the book loosely will be spoken for. So whatever we need to raise in addition to the debt financing, I think we have a clear pathway to doing that. I think we'll be very kind of um, sensible about this. I don't think we're going to do a massive financing and try to kind of overstretch, so to speak.
No, I mean, but for sure, within H1, you'll be in the position to make, or to at least kind of wrap up the financing, or at least get.
That's most certainly the target. Yeah.
Yeah, and in terms of the financing, of course, you expect the capex to come down slightly, but if you break it down in percentages, what do you expect it to look like?
You mean between debt and equity?
Yes,
I think let's just not do something too unconventional. If it's 50% debt and 50% equity, I think that'd be a good result for Guinea.
and on the equity side, of course, La Mancha should be capable of covering a lot of it.
Yeah, but nobody's money comes without me doing my homework. So we just have to deliver the goods and make an attractive investment proposition. At the same time, if we make good progress on Morocco, I think that also gives people confidence to kind of put more money to work. Because, as I said before, like you don't really just invest in Guinea because you think it's SRG is a mining operation. You do it because you believe in the second phase, Morocco, and that's all moving along nicely too. So we need to keep pushing on both fronts, and then the money will get unlocked.
To end, we will explore the second leg to the plan, which is to construct what is poised to be one of the first off-scale graphite anode facilities outside of China. This will allow SRG to capture a massively more attractive margin compared to that of only operating their Lola graphite mine. If you just kind of summarized your envisioned timeline and the significant milestones for SRG to reach a construction decision for the anode facility.
So we will need a couple of things. The first one is that we need the land in place. You can't build without having secured your plot. You need the power allocation to be secure. We need the engineering to be completed to Western standards. This will be largely based on a plant that was recently built in China, but the engineering needs to be translated from Chinese standards to Western standards, which underpin the permitting application that we need to make. And then once that's all in place, you can really have more intelligent discussions, so to speak, around the subsidies. So there's three pools of financing that we need to kind of bottom out. There's the subsidies, there's the equity participation, and then there's the debt that we need for the plant. And so all that needs to come together, but that's going to take probably the better part of, let's say, another year, maybe longer. Just to get the feasibility study done will take easily another, 9 months. So some things can move in parallel, but most certainly, we're looking at 9 to 12 months before we really get to any kind of meaningful decisions on Morocco.
With what confidence would you state that you were able to at least get all of the engineer? I mean, all of it, but enough to start actually putting together a finance package
I
and
know,
going for a
like without
construction.
any, like I think we'll have the numbers at least internally in the next 3 months or something, because I'm not going to buy any land without having bedded all this down. So it's just if you get to a final decision, you need a lot more. But internally, we'll have shored up our confidence in all this substantially. I think you can probably read the tea leaves if we start buying land in Morocco that we're highly confident that we will be able to kind of move this forward because we have no interest in just owning land in Morocco and not doing anything with it.
And internally, you're working with C-nuns, C1's numbers and what they saw
Yeah,
in China.
correct,
Yeah.
correct. Yeah.
And financing for buying land in Morocco and these upfront costs, that will crystallize this year. So do you? I mean, you have cash on hand, so that it shouldn't be a problem. But when you raise for Lola, would you kind of at the same time maybe inch that up a little bit and get some
Yeah, yeah,
extra?
yeah. Why not? Yeah, it's all like with the raising of the money. Like you have to just be mindful of where the market is, and I'd rather do a successful financing, which is more modest, but actually trades up on the back of it, than try to overstretch and bite off more than you can chew. I think we've seen a few of those this year, and nobody's won as a result.
We understand that you expect engineering to kind of be there this year. Maybe even financing will get quite advanced. But post that, if we can do the remaining, the build time, commissioning there, can we just do the full?
Yeah, so on the anode plant specifically, the Chinese have built the equivalent of this plant in 12 months in China. Um, that's not my base case. I think it's probably going to take 18 months to do. But like I might be right, I might be wrong. It's definitely not going to be as fast as 12 months. So realistically, this is all going to be, call it 2 years behind the mine. Everything is just kind of like, and that's exactly how we want it. Of course, we can accelerate if we have some, higher tolerance for risk and more money available. Everything can be accelerated. But in reality, we do like to stick to kind of build the mine first, and refinery can kind of start in parallel, but it most certainly should not be conditional on each other to reach the same completion point.
So kind of completion would be end of 27 or early
Yeah,
28.
probably like that, and that coincides nicely with the real kind of expected kind of uptick in demand in Europe and in North America.
Morocco, I understand it. I was just there. I like it a lot. I'm impressed by it. But can you explain why you decided to pick Morocco as the
Yeah,
place?
so there's a whole host of reasons that come into play here, but um, one of the key attractions of Morocco is its location on the continent. It's just up the coast from Guinea, so it's very close by. It's got a first-class port in with the port of Tangiers, so you have really good access to the country. Which also means that when you come to sell your product, you can actually get it to market relatively quickly. You also have to know that Morocco has got a free trade agreement with both Europe and the United States, which makes it unique because Europe and the United States don't have a free trade agreement with each other. So it's one of these countries where you can trade with both partners. Then you have to always weigh up. Do we think we can do business there? And the answer there is wholeheartedly yes. Like you have to look at the success that Aya has seen and the team that they have on the ground, and I think our group could leverage some of that work. So you have a good people, good location, good free trade agreements, and then you have to look at some of the other key kind of parameters, like what's the cost for power, which is very attractive, around 7.5 US cents a kilowatt hour. There is plenty of renewable power. There's a lot of solar, a lot of wind. And another thing that you have to keep in mind is that they're very open to anyone that wants to come and settle in Morocco. So if you show up with a Chinese partner, that's perfectly acceptable. And so that's an attraction too. We don't want to be in politics. We just want to build our business. And so that helps when you have a host country like Morocco, which is just ticks pretty much every box.
And then I was going to ask about the kind of a rough flow sheet outline of how the the spheroid and purified graphite is actually produced in the facility. Maybe that's a bit too lengthy to explain. You can if you want to, but more importantly, has this exact process been done in China, or is there some tweaks to it
No,
in your
this this
facility?
this is being commissioned as we speak in China. So, and that's the important part.
Yes.
We're not trying to reinvent the wheel, and basing the facility on something that has been recently built and is being commissioned is very attractive because it de-risks a lot of the steps that otherwise you have to take on your own.
So let's just try to give an intuition to investors what the economics of 100,000 tons per annum plant looks like. First of all, again, you showed this briefly in your presentation, but what's the approximate per ton value of the end product,
So I
roughly?
think you can probably sell this material, depending on a lot of other variables, for about $9,000 a ton, and you could probably comfortably try to get your cash cost, call it around $3,000 a ton. So you make $6,000 a ton, um, and you do that over $100,000, 100,000 tons a year. You can easily see how you make some very attractive margins. Um, on your operating cash flow.
I guess from SRG's point of view, it doesn't really affect in the end, but does that cash cost does not include the savings of sourcing the input graphite yourselves? That is a
This
good
is this is
chunk of
this
it.
is a this is a complicated question. Like if you get this transfer pricing issue between Guinea and Morocco, which is something that we'll have to work through with our accountants. Like we can't sell at an imaginary price from Guinea, so yeah, you have to take that into account. But even if that means that you can't sell it at cost plus, but that's like one pocket here and one pocket there. If I make the $500 there and not there, like it doesn't change anything for me because I
No, it's just to give an accurate
yeah yeah
representation for the margin. But when you say 3,000 cash cost, that's what they're expecting to see in China, maybe a bit more. You're seeing a
no
bit more
I think
higher
they're
cost
probably
structure.
seeing a lower cash cost than that.
Okay,
Yeah,
and that's mainly driven by labor and energy
yeah,
costs.
energy cost, subsidies, tax holidays, the whole.
And you don't think that that Morocco can be competitive with this with some
No,
tweaking and
I think
cooperation
so,
with
but I don't
Morocco?
think it will be as cheap as China. So,
And when you say 9K per ton, is that something we're seeing now, or is that something that is assumed in a couple of years from now?
no, that's what we're seeing now.
Okay.
Yeah.
And if your personal opinion on what you're likely to see in when you hit production.
Like in the end, probably higher is the answer. But the real, the real obsession is when you're in mining business or the refining business is what's your cost position, and I just want to have the lowest cost because I think that will always trump, any other consideration. Because as long as we need natural graphite and you have the lowest cost position and you can produce it at great volumes, then you win. That's really kind of so it's hard to predict what the price will be. Higher is probably our immediate reaction.
Yeah, so if we put the pieces together, 6K margin, let's say, you're at close to a billion of annual revenue at that point, or yeah, profit. I mean,
Yeah,
not too far off, 600,
yeah.
700 million,
Of which I mean we do have to share
half
some,
half. Yeah,
but
but nevertheless, it's a big idea.
yeah,
Um,
and that and once you've done successfully one, you can do another one and another one. Like it's not you don't have to limit yourself to one. We just need to prove that we can do one.
and with the profit sharing, it's post all of capital as well. It's structured.
It's more nuanced. We haven't fully disclosed exactly how it works. I doubt we'll ever do it because it probably is commercially sensitive. But important to note is that it's obviously the profit, it's profit. So after you've paid your operating expenses, but also third party kind of financing obligations. So any money that we borrow, we'd have to pay the interest on it, but also the scheduled repayments of the principal will be deducted before there's a profit declared.
So essentially, post payback.
Yeah, but like not like it doesn't mean that we have to pay back the full investment first. Like otherwise the profit would be so far out in the future. Um, Although actually maybe these prices not so much. So
Yeah, and that's the interesting thing. So, what do you think the capex would come in at
I
approximately?
think I think this is going to be let's say it's going to be significantly less than a billion. Could be order of magnitude maybe 500.
I mean, so I mean, if it comes in at 500, you'll pay back in less than a
Yeah,
year.
it should be okay.
Yeah, so it's
Doesn't mean we will
that's.
pay it back in 1 year, but you know.
I mean, if you want to grow, you want to
Yeah.
grow. But that gives people a pretty good
Yeah,
sense.
yeah, it could be very, very attractive, right? But the main trick is to be able to do it at scale, and that's really what drives it all. Like this, the economics don't, are not the same if you build something really small with Western engineering, and small production volumes.
And I guess here, not liking mining, but the sustaining capital. I guess you have a cash cost, but if you add some, I mean,
Yeah,
how does that
yeah.
factor in?
I don't have a good number for you today for the sustaining capital, but that should be manageable. You know,
Are we talking $1,000 per ton or 300? I mean,
uh,
a sense.
too early to tell exactly. Also, because some of these facilities, you want to look at how the current one is running. So once that's been going for a year, then I have a better handle on what it will be going forward. Right.
And the economics of C1's factories in China, I guess they're currently commissioning or ramping up the replica, or I guess the OG version of what you will build eventually in Morocco. But can you look at some other? What are their projections? I guess in terms of their economics.
They'll never allow me to tell you that. um, but no, they obviously believe this is a great business, and they see zero chance for it change to that it's going to change materially. They only think it's going to get better. But it's paramount for them to move overseas because they see that, it's a classic example of like a diminishing value proposition in China. There is a lot of capacity, but the demand's coming from overseas, but the trade barriers are going to go up. So you got to get in the tent in order to maintain, extend basically your competitive advantage, and that's what they're doing.
In terms of the EPC proposal for the anode facility from C1, that's something that it seems like you guys will have very shortly. I guess at least internally.
Yes, yeah, because we also want to we like with all these things is a lot of steps to get through, and so we need to make sure that we have we're all singing off the same song sheet, and so yeah, that's definitely a focus area. No, it's not our year here. 2023 is almost done. By the time this airs, it's 2024, but Chinese New Year is a little bit later, beginning of February. So we're trying to push hard as we can before Chinese New Year.
And when do you think you'll release a comprehensive kind of feasibility study, or release how you view this to the market?
Yeah, that's probably going to be much later in 2024. The question really is, what kind of study do we want to release? Because like a PEA is kind of interesting, but um, but maybe that's what we do, and in parallel we work on the feasibility study. Maybe we wait altogether for the feasibility study to be ready. Depends a little bit on how long it really takes once we get the feasibility study firmly on the rails. How long it will take to finish that thing. If that takes longer than we were hoping, maybe we do a PEA just before so we can show something. If it's reasonable, then we just announce the correct date, and then we'll deliver.
But to touch back on the described timeline, you do see yourself getting through this year in terms of showcasing.
Yeah, I think
quality engineering
we have to show the economics one way or the other.
at the very least. Yeah.
Yeah. Yeah.
But feasibility might you skip showcasing that, or would it
No,
potentially just
well,
bleed into 25?
it would be good to show some preliminary economics. Let's put it that way. But at the same time, if it becomes a distraction and it's a lot more work, and then all of a sudden the feasibility study gets delayed because of that, then maybe not. So,
But feasibility should be expected for age 125.
yeah, if not earlier.
Excellent. And I guess it's required to finance. Would that be fair to say?
Yes, absolutely.
Could you kind of highlight how C1 addresses the many difficulties that you would have otherwise, faced if you were endeavoring to build an anode facility yourselves? And most of your peers are, I guess, in that position.
Yeah, so in a way, the flow sheet is not unique, but what is unique is that to do it at scale every day, with the right kind of result, that's unique. And so I think they have successfully made the transition from whatever pilot scale and lab scale tests that they've run to industrial scale. And that's something that only with the passage of time you can achieve. And so that's why we want to work with them, because it allows us to kind of accelerate our own development. And so we will not build a pilot plant and run that for another 5 years, try to get the spec perfectly right, and then to kind of upscale that. So really, this is a way of de-risking that whole step of commercialization of the flow sheet.
The last thing that I always like to ask is, where do you envision SRG in 5 years from now, and what kind of returns do you think you would have been able to generate for
returns? No, like most important is, I think in 5 years we'd like to be the #1 anode material producer outside of China. And that's the goal that we state publicly. The share price will follow. In the end, I do think that the amount of money we need to raise and the means by which we can raise it will mean that the dilution is probably manageable. We're not a $100 million company today that needs to raise $5 billion. So we really believe that what we have in front of us is a lot of work, but financeable. So in terms of total returns, it's impossible to say. But if you look at the cash generation potential that we will have in 5 years, I think you don't need to be a PhD in economics to see that the outlook for SRG and the share price hopefully will respond to it is very, very positive.
I mean, kind of ballpark calculation to get through to build the anode facility and the mine. Maybe a reasonable assumption is that you will have to raise $300 million, something like that.
Of equity.
Yeah, of equity. Rest will be debt.
Yeah.
So it's like, dilution should be very manageable.
Yeah, but there's nothing that precludes me from inviting another strategic. There's many other ways, non-dilutive financings. I can sell 25% of the anode plant to someone that is interested in the offtake, or I could just tell them, you can have the offtake if you give me X prepayment, right? So there's many other ways that to get this check down and minimize the dilution, which we're all shareholders in this, so we try to kind of do what's right for the company, because we stand to benefit from it too.